I am the founder of MEM Investment Research, and I'm really happy that you could join me today. I look forward to sharing with you ways that you can uncover uh, charts and patterns within those charts that will help take your trading to the next level. And I'm going to share with you some of the key components of charts, and we're going to dig in with quite a few examples. So let's go ahead and get started. I'll give you a bit of background as far as who I am. Uh, Again, Mary Ellen McGonagle, and growing up, I really didn't know much about the stock market. I did always have a love of finance and numbers, and right out of college, I moved to New York City. And in a stroke of luck, I met someone who was able to help me get a job on the trading floor of Goldman Sachs. So that was my start, and it was just a very, very alive and happening place, the trading floor. I was certainly low man on the totem pole, but all the action and everything, the commotion that was going on, huge amounts of money being traded, and it was really very exhilarating. I knew I had found my future. So I did leave Goldman for a job on what's called the buy side as an assistant to a portfolio manager at a very large insurance company. And I moved up the ranks there to, at one point I went on to manage over $2 billion in assets. Now that was fixed income, it was bonds and corporate bonds and so forth. But the company was very, very buttoned down. It was big, but it was my first experience of how, as an investment manager on Wall Street, I was privy to information that was not trickling down to the individual investor. This, of course, was during the go-go years of the 80s. And a lot of that has changed now, and I think it's really, really exciting that the playing field has leveled. The SEC, of course, stepped in. So now individual investors have the access to that same information that really only the big portfolio managers could get to. So again, really exciting to, as an individual investor, to be able to get your arms around all of the information. It's available to you now, and the big advantage that you have outside of these institutions is you can be more nimble. You can get in and out of stocks quickly. You don't have a lot of volume. You're not moving charts with your activity, so you really can outperform the markets as an individual investor. So getting back to my background, after 8 years managing money, I did decide to move to the West Coast with my then new husband, and I joined William O'Neill and Company in Los Angeles. And some of you may know the firm. In addition to working with institutions, which was what I did, they also publish investors' business daily. But during my time at O'Neill, I worked very closely with portfolio managers and analysts throughout the world. I was there for the bubble of '99 when tech stocks were soaring, right into the subsequent crash. Then, of course, the '02 recovery, the '08 banking crash, and into the '09 recovery. So I've seen a lot of cycles throughout that time, always looking at charts. That was a major part of our work. That's what we did. I taught institutional investors how to interpret these charts. A lot of my work was on weekends. We were mandated, and I loved it. We would look at thousands of charts to come up with themes where we were seeing the most strength and so forth. So again, I look really forward to sharing that information and the insight with you to help you better your trading. So more recently here, I've started MEM Investment Research, and with that, I put out a top performing weekly newsletter, and it's currently going to institutions, but I just opened it up to self-directed investors. So again, I look forward to you maybe taking a look at that at some point. Now, this next area, I'm showing you a disclaimer. I'm not going to read it word by word, but if you could take a moment and look at it. The primary item here is that the presentation is for educational purposes only, and it's not a recommendation to buy and sell any individual securities. And then one last item I was going to ask, if you could please save your questions until the very end. The odds are that I'll probably be covering your question, but more importantly, there'll be ample time at the end so we can review any questions that you might have. So let's go ahead and get started. I'll give you an overview of what we will be covering today. The first item I wanted to go over with you is to review what the charts are telling us. So quite simply, charts provide you, the investor, with price history of a given stock or an index, of course, and you're getting that price history coupled with volume, and it's going to be for a specific time period that you choose. But the reality is that charts are telling you quite a bit more, and we're going to uncover that and get into that. The next item that we're going to cover is which time frame within these charts is best for you. There are, as you know, many time frames, intraday, daily, weekly, even monthly, but each different time frame is going to provide you with different insights. So we're going to go ahead and review that and go over which time frame may be best for you to pay attention to. Each of course, investor is different. You have different goals. So the third item is which indicator is most powerful. So in addition to looking at price and volume on a chart, you're going to want to overlay that price information with indicators. And I'm going to share with you the indicators that I have found in my many years to be the most powerful in helping with investment decisions. So we'll go ahead and review that. Also, we're going to look at history to provide you with guidance and help you visually see how you can uncover what these charts are telling you. So we're going to go over quite a number of examples. And then lastly, at the very end of this presentation, there will be a special offer. So I urge you to stay through the very end, and you can take advantage of that. So let's go ahead and get started at the very beginning. The first item here is thought I'd take a few minutes and review why charting is so important. And the reality is, as an investor, you can go out, do your screening, uncover a very, very promising company out there. Maybe it has very strong fundamentals, sales and earnings are strong. Perhaps the company's on the cusp of finding a better way to treat cancer, or maybe they've invented a flying car. But the bottom line is that may be very exciting. However, when you are looking to buy a stock, it is critically important that the chart of that stock is healthy. You do not want to buy a stock with a weak chart, and you want the wind behind your sails, so to speak. So it really, really is a very critical component of investing. A lot of the fund managers that I've worked with, they have lists of stocks. They've done the work. They know that they are promising as far as being a growth company. But a lot of my work was staying on top of their list of idea stocks and alerting them when the stock chart was giving signals that the stock price was poised to go higher. So that's, again, a very key component. You're really going to want to know how to read a chart. The other thing is, throughout my many years of studying charts, there were really two common tenets that occurred again and again in these charts, and that is that prices trend and history repeats itself. So these two beliefs that prices trend and history repeats itself, they are the basic tenets of technical analysis, and they are really, really important to keep in mind, and we will show that with some of the examples. So again, while the story behind a stock or the earnings might be strong, you really need to make sure that the price trend that occurs in your stock is positive. And again, the way to learn that, of course, is to learn how to read charts, and we will go ahead and review just that. And the next item I did touch upon earlier is determining what price, or I'm sorry, which time period is right for you. So as mentioned, you do have the option when looking at charts to have a daily, weekly, or an intraday, and the shorter the time frame, that will be for a shorter period of time that you will be entering or exiting a stock. So intraday would be more applicable for day traders. You're getting in and out of these stocks. A lot of the information, and again, we'll be looking at various examples on that intraday. It's going to be very, very compressed, 15-minute chart as an example, and it's going to allow you to quickly respond to moves. Money managers, they tend to use longer term, weekly, and in some cases even monthly price information. And the primary reason for that is because those displays are quite a bit less volatile. And the longer term your price chart is, the longer term it is providing you as far as the predictive outlook. I hope that made sense, but again, we're going to go ahead and dig into some examples, and I think you'll get a real good feel for that. And then the third item I touched on was what key indicators work best on your chart. In this particular tutorial, I'm going to be, again, sharing with you what I have found to be very, very useful. And again, these are the indicators that institutions use. They are widely used. And the reason that's important to me is because when you are looking at an indicator that is very widely used, it tends to become self-fulfilling. You're not the only one that's paying attention to that key metric. So that's another reason. So the three key indicators that I'll be using today in particular are moving averages, and I'll define that, relative strength indicators, and then MACD. Those are the three that I have found to be very useful. Now, of course, there are others. There's Fibonacci, Bollinger Bands, but again, for today's presentation, I'm going to be sticking with the ones that, for me, have worked very, very well over the years. And as we review the examples, I'll go ahead and point out the various indicators, and we'll go ahead and get into their relevance and how you can interpret what they are saying. So let's go ahead and I'll review with you the 5 key ways that you can use a chart. And the first one is to define a trend. We're going to want to be able to know before you enter a trade that that trend is up, and of course if it reverses you're going to want to know so you can get out of that stock. Charts will really help you identify and pinpoint your buy and sell because they're going to give you signals. This third one is determining broader market conditions, and I view this as very important because before you get into a stock, you want to make sure that the broader markets are healthy, and I'll provide you with an example of how to use a chart to tell that. The fourth item is you want to see if your stock is finding support. It's in an uptrend, but does it look as if that trend is going to remain up? And then lastly, how can you spot a reversal of that current trend? You don't want to stay past your welcome in a stock. So if that current uptrend starts turning, you want to be able to know by looking at the chart and get out of that stock. So we're starting here with our examples, and I'm going to start out very simply with providing you with price, very simple price and volume, and then we'll dig in further. So this first chart is a monthly price. It's giving you a 10-year history of Apple. And a lot of you might think that it's not useful, but as we drill down, you may see, and hopefully you'll notice, that the longer term your chart is, the less volatile. So we're looking at the recovery in 09. The beginning of 2013 was tricky, but then the uptrend continued for 18 months. So it looks very normalized. You could have stayed in this stock using this, but however, let's go drill down a bit more and look at some of the other time periods. So in this particular instance, I'm showing you a 3-year time period, and this is the most recent 3 years. And notice how it's quite a bit more volatile. And the information, you can see where you may get into it and get shaken out and get into it. So as we drill down, here we're looking at a daily price chart. This is an 8-month period, even more volatility. These big price gaps, trends up that are reversed, you really wouldn't capture on a weekly or a monthly chart. However, a lot of times, particularly if you're an investor as opposed to a trader, you don't want to see this type of volatility. And again, we'll get into longer versus shorter term as we dig into some more examples. But again, Apple, most recent time period, and this is a 15-minute price chart, and it's even more volatile. Now, a lot of you listening may be very active traders. You might welcome this volatility. As an example, you might get into this stock in this period, stay with it for a couple of minutes, and so forth. But hopefully you were able to see through that progression the real difference in the price information from a longer term down into this 15-minute. So this time period concept, as well as with the indicators, is really going to depend again on your approach to the markets. Are you, do you have the ability to sit in front of a screen and trade 15-minute? There's no real right or wrong way. It's really what you are comfortable with and what you have mastered as far as how to trade. But this shorter term time period will require more diligence. Using longer term charts as an investor, you can place your trade and then, for instance, with a weekly chart, visit your stock again at the end of the week and make decisions based on what you're looking at. So let's go ahead and look at some more examples. So now what I am showing you is Apple on a monthly. And what I've done is what I've talked about before, where you overlay indicators on top of the price information. So here's that very same monthly chart. We are looking at that 10-year same time period. And again, notice how just steady this stock price looks, particularly when you compare it to that 15-minute or the daily. And so what I've done is overlaid these RSI, MACD, and this is your moving average. So with this in mind, I will go ahead and dig in and explain what these indicators are. So let's go ahead and start with this RSI. For those of you that are not familiar with what you're looking at, this particular line is plotting the price history, and RSI tends to use 14 time periods as a metric. So we're looking at a monthly. It's taking the closing price of the last 14 months, dividing it by 14, and then providing you with this smooth line. And then you'll see the difference. It's the same 14 weekly, daily, and so forth. This RSI has a dashed line in the center. That's your net neutral. So if your line is above this net neutral, it indicates that the stock is in an uptrend. It's positive. When we go up over, this is 70, your metric, when it gets up above that, the stock is overbought. And you can see it's signaling that with this green. When your stock is overbought, and it can remain in overbought for a lengthy period of time, but there is an expectation at some point in time that it will reverse. So that is why it's signaling it. It becomes more effective in your weekly and daily charts. Your moving average, this is a 6-month, and the moving average line is smoothing out the price history. And it is very, very effective in spotting trends. And also the moving average is very, very effective in helping you spot, I talked about support. So here we have a stock in an uptrend, and you want to make sure that your stock trades right to that key moving average and bounces and finds support. That's what we're looking for. In this particular period, I talked about it before, the beginning of 2013, when it breaks key support, oftentimes you're well served to get out of the stock. And in this particular case, this was an 8-month period. We'll look at it in more shorter term, but you were better served to not have been in this stock. It broke support. Down at the very bottom is what we call MACD, and that's your moving average convergence divergence. And fancy name, but what we are looking at here is your black line is your momentum indicator, and the red is your signal line. And quite simply, the slope of this is telling you that the stock is in an uptrend, but even more importantly are these crossovers. This is what traders look for, this momentum oscillator trading down through that signal line, and that coincides with this break. And then it also coincides with your RSI. And this is critical. When you're using indicators in your charts, you want to see confirmation, not just the break or just the RSI trending down. When you have 3 indicators telling you the same thing, that this uptrend has reversed, it's going to give you that confidence to go ahead and pull the trigger. So let's go ahead and look at something a little more applicable. This is the weekly chart. And for my work, the weekly chart speaks to me. I work with a lot of investors as well as traders, but I have found this weekly chart can be very, very helpful in keeping you in a stock, particularly one that you are positive on. I don't particularly like Apple at this point in time, but there were time periods where you had your uptrends. For the weekly, for moving averages, you want to use a 50-day and a 200-day, and it shows up as 10 and 40, and that's because 50 days is 10 weeks and 200 days is 40 weeks. So you're going to, a lot of times this is very standard, but if not, you will want to set that. So just paying attention to the moving averages first. Again, 2 things that are happening. It is showing you visually that the stock is in an uptrend. Now, the 200-day, your longer term, is going to be more critical, if you will, in determining the trend. So here we have the stock finding support at an upward trending 50-day moving average, but this is also confirmed by the RSI trending upward, as well as this positive crossover of the MACD. So again, we have three signals that are telling us this stock is poised to outperform and start an uptrend. Looking again at this weekly, your uptrend is reversed, coming down through the RSI. The stock breaks support, but as I pointed out to you, this longer term, and it really again is going to depend on your appetite. You might not want to sit through this type of correction, but for those that again are longer term, this RSI remained positive. It remained above the net neutral, so it's telling you it's okay to stay in this. Your longer term trend is still intact. Your MACD, one thing I did not mention is the position for the MACD. This is your net neutral. So if it's above here, it's positive. So that's still signaling positive. So longer term, you could have stayed in it, but again, it's going to depend on your trading style. Over here, the signal gets much more pronounced that a downtrend has indeed started. Your RSI has trended below the net neutral. Your price has come below this longer term 200-day moving average, and indeed your MACD is now in negative territory. And as you can see, this is taking us back to mid-year last summer. And really since then, Apple has pretty much been a stock to avoid, and paying attention to these indicators really would have gotten you out of the stock and looking elsewhere for other names. So the next one, again, this is Apple, and it's a daily chart. And hopefully with these indicators, these charts are coming to life for you. You're not just looking at price and volume. You're really getting signals. So this gets a little busier. In this case, for Apple, I put in a 10-day, a 50-day, and a 200-day. Again, your RSI is using 14 time periods. So this is 14 days closing divided by 14. So it's responding to that daily. And so what I wanted to point out here is, first, you can see right away that you are getting a bit more volatility here. And while you can very much trade, I use daily charts quite a bit in my work, you do need to be comfortable with that additional volatility. So let's go ahead and look. This is something I didn't mention with your RSI, that when it gets below 30, that indicates the stock is oversold. So unlike your overbought period up here and you expect it to turn down, when the stock is oversold, there is an expectation at some point that it will turn. So we are looking here at the very beginning of this year, and so what you can see is the stock did try and turn. I would call this a head fake because your MACD is still very much it's turning up, but it's down here in the negative. For my trading, and there are people that will trade this. For me, I need to see this MACD make it up above that net neutral. I also, even though your RSI is trending up, I want to see it up above that zero line. So while I may not be the first one in, I'm missing out on a lot of this. And this kind of confirmation is going to, when it's truly positive, really keep you in, get you into a stock for a longer move. And so with the moving averages, this is your 10-day moving average, and you can see that it's now in a confirmed uptrend. The stock is finding support. But here again, it did get overbought and it reversed. So hopefully you are seeing this presentation as a way to really use these price overlays, these indicators with the price action to hopefully it speaks to you so you can again get out of stocks when these downtrends start, and then ideally enter them as they go up. But we'll go ahead and show some other examples, because for me, again, Apple is not an interesting stock. Your net 200-day, which I talked about before, is going to override the others with the trend. Throughout this whole time period, it's in a downtrend, and that is going to keep me out of trading a stock like this. I want to see, and there are plenty of stocks out there where your short-term and longer-term key moving averages are in an uptrend. But let's go ahead and look at Apple again. I talked about this 15-minute chart, and hopefully here again you can see the real pickup in the volatility, much or very unlike the weekly or the monthly, but again, tradable. You still can spot trends, the momentum oscillator through the signal, your shorter term moving average in an uptrend. So the same principles apply, but again, you need to be prepared for this whipping around with this 15-minute, so more for trading. So I touched upon this, but I'm showing you this example, and it's marked up to really highlight and make sure that you know that having more than one indicator signaling a trend, whether it's up or down, is from my work, it's critical, because it's going to really put power behind. So what we're looking at here is ABX. It's gold. I believe it is the top performing stock this year so far, or certainly one of them in the top 10. So we're going to be paying attention to, this is the beginning of 2016, so you're sitting there, you're an investor. How can you get into this stock that has gone on to be one of the best performers year to date? So let's go ahead. I talked about these moving averages. In this instance, your longer term is blue. It's your 200-day, and this is your 50-day. We're looking at a weekly chart. And so sure enough, you're hopefully, if you're looking at this, you would not have entered a trade even during this. This is a head fake, because your longer term trends are down. So stay away. But now we have a leveling out. So that's interesting, similar to this leveling out. But in the beginning of this year, it did turn positive. So now it's getting interesting. Your 50-day moving average turns positive. It's pointing toward a potential uptrend. I touched upon this, and I wanted to tell you, I should have mentioned this in the beginning, but I have other tutorials that dig in much deeper into these indicators, and I would urge you to listen to them, because for me to get into every nuance here is going to be a lot, but I'll touch upon the highlights. So your stock price moves up through this 50, up through the 200. So when you have a downward trending longer term moving average, it acts as a ceiling. But look at this, we've broken up above it. You've done so on big volume. I talk a lot about moving average crossovers that are important in that tutorial. So we have a lot going on here that looks interesting just using moving averages alone. But let's go ahead and key into the other indicators, the RSI. So we've had periods where they've dovetailed into positive territory and then sure enough failed. But this is a very decisive move into the positive territory, and it's confirming what we're seeing with the moving averages. Likewise, your MACD, again, this is your net neutral, it's in positive. So now we have three signals that are telling us that gold has bottomed, and particularly this particular stock. So that would have gotten you into this particular stock. And we're looking, this is ABX again, and to point out and make sure you're aware again that this is the daily price chart, And this is that activity in the beginning of the year, and note how much more volatile it is. Still, you can still very much use a daily chart. We talk about moving averages, and in this case I have the 10-day, the 50-day, and the 200-day. So when a stock is explosive and it's moving quickly, that 10-day becomes its floor, its support, if you will. However, and I would only use this 10-day to get for buy points. You don't want to buy a stock if it's too far away from the 10-day, because eventually it will come back. There is a gravity to the markets. But for real true support, you're going to want to use your longer term. So yes, it breaks the 10-day, but as long as your 50-day is in an uptrend, you should still stay with that stock. That's, for me, going to be the override. If it breaks the 50, it's not, I'm sorry, the 10-day, it's not quite as concerning because your longer term trend is still up. So RSI overbought shows you indeed that it is an expectation that the stock price will fall, and sure enough it did. And again, MACD, even though we had this negative crossover, it's still in positive territory. It's still above that net zero. So that's another indicator that will keep you in the trade if you are inclined. Again, there are those that would not want to sit through. This correction was about 9%, and you might not have the stomach or the appetite for that, but if you, again, are a longer term investor, you would use the longer term moving averages to help you. So same, again, we're looking at ABX, Barrick's Gold Corp, and this is that 15-minute chart. It's a 6-day, much more volatility, but still you can use these indicators in this shorter time frame. So for instance, this is taking us back. This was a recent break from a couple of days ago when gold did sell off, and RSI, as you recall, if it gets below 30, it's oversold. So at some point you're going to pay attention, and these are the things that you can screen for. You can screen for overbought going into positive. You're going to want to use the 30 and then above the 50 as your screening points. But again, pointing out that each price chart time period is going to have its purpose in your trading. It's going to all depend on what your goals are, what your outlook is, and what you can, a lot of people, 15 minutes is just a little too active, but for some people, real day traders, they love it. But more importantly, paying attention to these indicators is really going to serve you regardless of which time frame you use. So let's go ahead. This is something I didn't talk about, but I did want to touch upon because it is important. In addition to using indicators, oftentimes stock price information. This is a weekly chart of Huntington. This is a stock that has been on our buy list. We picked it up here because the stock price was exhibiting a price pattern. This is outside of your indicators, and it is another tutorial that I have, but what you are looking at here is what's called a base. So a stock price hits a relative short-term high, trades off, trades down, and consolidates. We have a back and fill. This is a weekly chart. And the stock at some point, in this case right here, it breaks out of this consolidation, and sure enough, it goes on for pretty significant gains. And again, weekly, the longer term your chart, the longer term the prognosis. So a weekly breakout of a weekly chart will tend to be a longer advance. This was in the beginning of this year. And monthly is going to be, of course, even longer, and daily, your breakouts will work when finding these chart patterns, but they tend not to be as lengthy in their advance. I know I'm covering quite a bit, but again, there are other tutorials that will spend more time on all of this information. So here is another example. This is a stock that we put on our list of my weekly newsletter back here in May. So in this particular instance, we are combining that base that I talked about, and the stock breaks out of this base. This is a daily chart, and it did so on big volume. But in this case, I'm overlaying the indicators, so we're getting secondary confirmation of this price pattern. And in this case, your RSI turned positive, as did your MACD. So now we have key moving averages in an uptrend. So 3 confirming indicators coupled with a chart price pattern is good. It's not going to get any better than that. So we did, as I said, we put this on our buy list, and it still remains today. It's been a big winner for us. This next one, and I talked about active trading. This is a 15-minute chart. So this, what I'm pointing out here is when using these 15-minute charts, in order to experience longer trends so that you're not trading every 6 minutes, you'll want to use a stock that's quite active. And a lot of you may be familiar with NVIDIA. It is probably the top technology stock right now, certainly one of. It's been a big winner. And what we're looking at here are the last 3 to 4 days of activity. But because it is so actively traded, your trends tend to be longer. And so this is, as you get more active with your trading, you will see that not every stock, even if it's a 15-minute, are going to provide you with these longer trends. Some stocks really don't go anywhere during a daily period and 15-minute, but again, the more active, the more active a stock is traded. And you can find this out. A lot of stock trading platforms, their initial interface will show you the most active stocks so that you can trade them. And you're going to want to, before jumping in, of course, is look historically at how a stock trades over time so you can get a feel for when it begins an uptrend. Does it tend to be short-lived? Does it tend to last longer? I've found over the years that each stock has its own personality, for lack of a better word, and they tend to trade. I talked about this, how historical precedent really does carry forward to future, what happens in the future. So now I'm talking a lot about uptrends. Let's take a look. This particular stock is Sonic Corporation. It's a small restaurant stock. But what I wanted to point out here is we're looking at a daily chart, and this is the beginning of the year. So we did get a signal in this particular stock. It was on our buy list for a short period of time, and you'll see why. So the uptrend was identified at the end of February. We had the RSI confirming the MACD, your shorter term moving average trending up. So a lot of positive things going on. Also, fundamentally, there were positive things. They were opening quite a number of stores. Restaurant stocks in general were doing well. So there was a lot that made this stock look interesting and appealing. But as you can see, this uptrend did not last. And we were paying attention. We picked up on this downtrend signal as it trended down, and even more importantly, down negative through that net neutral. So now it's really trending negatively. When the stock price breaks your longer term trend and you have these other signals that are heading south, that is, if you haven't gotten out yet, for sure this is the time to exit. But our indicators were telling us earlier than that the uptrend was broken, and you can see that the stock really has not recovered since then. It's remained in this negative area, and it actually turned into a very good short stock for our investors or our newsletter subscribers. So that's looking at an uptrend reversed. And then I did touch upon this, and this is actually the last chart that we will be looking at, but it is how to use these indicators to identify strength or weakness in the broader markets. And this is really important because if you are buying stocks, you want to make sure that the broader markets are in an uptrend. This is something, again, that we touch on each week. I start out by talking about the broader markets, where they are, what our expectations are for the coming weeks. So let's take a look here. This is going back, it's a weekly price chart. Each bar is 1 week of trading activity. And we're looking at from mid-2014 to recent. So during this, of course, 2014 into the middle of 2015, your uptrend is for the most part intact. We did, of course, get a big break in the fall of 2014, and I know I did get out of a number of stocks because it broke the 50, it broke the 200, but we were able to spot the reversal and uptrend. But again, using these moving averages is going to be very critical, because when you have your 50-day cross below your 200, that's very negative. And this is taking us back to last summer. Many of you may have experienced this fall. It was this steep drop in the markets, and we did recover, but you can see that that very clear-cut uptrend has lost its momentum. Now, for our work, we were finding enough in the way of healthy stocks, and you can see your 50-day started to resume an uptrend. So while you weren't in as clear-cut of an uptrend, you can use these moving averages to help you get into the markets and stay in them. So here we're looking at the reversal that occurred after this horrible drop at the beginning of this year. And so in February and March, we were getting quite a number of buy signals, and this broader index chart did confirm that, particularly when the slope of that moving average turned positive, and it continues to look positive. So that is where we are now. So let's go ahead and identify how can you read charts properly to help with your investing and help bring it to the next level. Well, the first item I would say is you want to find indicators that speak to you. I've been sharing what I have found useful over the years, but as I said, there are other indicators out there, and you may want to explore them. Again, we each have our own style of investing, but I will say what I've been showing you has worked again and again throughout the years, and they are very powerful. So also, we touched on this, you're going to want to use the time frame that best fits your style. So the shorter term time frame, 15-minute, you can even get more refined than that, is going to be for your daily trader. And then your longer term is more for investors. And then multiple signals, and hopefully you picked up on that you want to have multiple signals that are pointing you toward that same conclusion so that you can have the confidence to really pull the trigger. And then lastly, for broader market guidance, using those moving averages, that 50 and 200-day moving average. So let's go ahead and talk about some conclusions. The first one, and I hope that I made this clear and you were able to see how really important it is to learn how to read your charts. You know, one thing I didn't mention in the beginning is how when I first saw, the very first time I saw a stock chart, it really was very, very, very confusing to me. I'm just here to say it takes time. It takes time, it takes practice, but hopefully you can see where putting that time in really will pay off for you. And hopefully some of the indicators I've been able to show you can take some of the confusion out of reading charts. And so I did talk about this. You want to take the time to learn, look at charts, review them in your spare time. A lot of the work that I've done over the years is looking historically at stocks that have been big winners. What do they look like? Can I find stocks now that look that same way? So that's where chart reading really is going to help you. And then this last item, know yourself. If you're devoted, do the work. Some people, you don't have the time to really get in and look over, review charts, study them, and in that case you might want to subscribe to a newsletter. And of course I do have a weekly newsletter, and anytime a stock, we do put new stocks on when we're positive on the markets, we mark those charts up, and that's another great way that you can learn if you don't have all that time to put into studying. And I mentioned that at the end we would have a very special offer for you, and this particular offer is a 45-minute audiobook, and it is discussing in great detail the 6 characteristics of a winning stock. So when I talk about winning stocks, I'm talking about stocks that are up 100% or more. And this is the work that I have done for years, trying to identify, or in fact identifying, these big winning stocks. The Facebooks, the Amazons of the world. And so in this particular audiobook, you will get really broken down what are the key characteristics of a winning stock. There are 6. There are a lot of historical examples that provide you with precedents. This is where you could do a lot of studying of former winning stocks to help you decipher charts, and it tells you where you can, it gives you some insight on how to uncover those necessary characteristics. So that is normally $300, it's $39 today, and then also included in that will be, if you are interested, you can trial my MEM Edge report, which comes out each week. The monthly for that normally is $97, but you can get it for $7. So hopefully you will take advantage of that. I did put my website information here at the bottom for anyone who would like to get any more information about me, about my work. If you would like to email me with any further questions, I would be happy to take that. So let's go ahead, and I am very happy. I do see that there are some questions already here, but if anyone would like to add to them, you can. The first question is, are you a CanSlim trader? And Louise, yes, I would say that. Yes, well, that is an acronym. For those that aren't familiar with it, is Investors Business Daily, William O'Neill. Each letter in that stands for a different attribute that a stock has to have. C is current earnings. But I've modified that over the years. I'm not a strict CanSlim. I have found that there are other attributes that are in a stocks, but I certainly have it as a background and a backdrop. The second question is, what was the moving average for the monthly chart? And that is a great question because each charted time period is going to have a different moving average. And for the monthly, 6. So 6 months is the smoothed out price average that really is the most effective on that monthly. And again, that longer term is going to be for longer term trades. Now, the next question, RSI, neutral 70. I may have misspoke. The neutral is 50. I apologize. If it goes above 70, it's overbought. So hopefully I did not misspeak. Good question if I did. And then Judy wanted to know, how did I scan for these particular stocks? I spend my time throughout the week constantly screening for stocks. Most of my work is I'm looking for high quality stocks, so it will start out looking for fundamentally strong, and then on top of that I overlay technical. So a lot of these indicators. So is the stock fundamentally sound, and can I put together with that a strong technical charting look to that chart, and that's going to get me into it. And then your question about restaurants. Is there an ETF for restaurant stocks? And I am not sure, but I will guess there is. There are thousands of ETFs out there. Unfortunately, I'm not quite sure what that ETF signal is. I'm sorry. And then Judy also wanted to know, did we anticipate the downdraft and how? We were getting cautious on the markets since mid-2015. So we were starting to pull in our buy list, but we did not expect the severity of that August drop. And but however, we did stick with the markets, and then even through that October drop. So we didn't get completely out of the markets, and sure enough, stocks did resume their uptrend. Is there going to be a recording? Yes, there is a recording. It is being recorded now, and we will be sending it to everyone that signed up for this. Another question, Louise, is there a reason that I use moving average and not EMAs, which are exponential moving averages? And that's a very good question. I use simple moving averages. There is another version, and this I go into with great detail in my moving average tutorial, where EMAs are exponential. They move faster. They're a little more responsive to more recent action in the stock. EMAs are, I find, more useful for shorter time frames, but for the most part, I do stick with simple moving averages. Another question, do you use the default settings with RSI and MACD? I do use the default. Now, you can modify them. Again, each person is going to have moving averages that or indicators that speak to them, but for these broader indexes, I do stick with the default settings. They're default for a reason. I find that they work very well. And another question, do I always use at least 3 confirmations? I have found over the years, yes, not only do I need that, I look for confirmation with the daily and the weekly presentation as well as those indicators. I want to see that the stars are lining up, so to speak. And the other videos that I talked about are on the ProTrader Strategies website. You should be able to easily access them, and if not, you can certainly reach out. And that was another question regarding the tutorials. Someone else wanted to know, what screener do you use? I use several different screeners. I do have professional level software that I use, but I also use a lot that is available to self-directed investors. And in particular, I have found FinViz. Many of you may be familiar, FINVIZ. In addition to their charting, they have a wonderful screening, particularly if you are an elite member. It's not that expensive. That is one that I use. And I believe that is the last question. And if I haven't already, I want to thank everyone for taking the time. And again, I'd urge you to continue your education. It's really going to help you take your trading to the next level.